The audit process for June 30th, 2016, and what is being distributed are the draft documents for the Board of Education to review. As a reminder to the community, my role as the external audit is to determine whether or not the financial statements fairly present the financial condition of the school district. We do that based on a risk assessment, checks and balances over the transaction, and we find that there are very good checks and balances over the transactions. As the final output of that process, you have a number of documents that I'm going to talk through with you. How much time do I have?
As much as you need.
So the most important one I wanted to go over was the general purpose financial statement, which is the larger document. And as a reminder, it's the district's financial statement. What's my part of this document is the auditor's opinion. It's an unmodified opinion. It sounds bad, but it's the highest level of assurance that you get that the financial statements are fairly stated. Behind the auditor's opinion, there's a table of contents, and then there's management's discussion and analysis, and it gives you some financial highlights for the school district. You had a very good financial year for a number of different reasons, some which may not occur in the subsequent years. I wanted to go through that because that does affect your ability to sustain programs going forward. And as we know, with the tax cap in place at the level that it is, it's about sustainability. It's about that 5-year plan. It's about trying to continue to be able to offer whatever programs you have without additional outside funding sources. So when you get the chance and you look through the financial statement, I think the thing that you probably want to focus on is in management's discussion and analysis, page 11. This is a reconciliation of your fund balance, and it talks to the positive results that you had during the past year. And on the revenue side of the budget, you collected a lot more revenue than you had anticipated for 2 major reasons. You were the recipient of a lot of pilot money that the district was not aware of that they were going to receive, both from Suffolk County and from Isletown. And that's a good thing, and that number will vary from year to year. It depends upon the parcels that were included. And so that was an extra bonus with respect to revenue. The other thing that occurred is restoration of the gap elimination aid, okay? And that's a one-shot item as far as we know. And so when you get the chance and you look back at pages 52 and 53 of this document, you'll see on page 52, this is a revenue report that shows what we expected to generate in revenue and what we actually generated. Off to the right is the positive variance, and you can see, as I mentioned before, the second row on this page is the pilot monies, okay? And then the row that's state sources, you can see that there was an extra $1.5 million from the state that was received. One-shot revenue, as we know. The spending side of the budget is on the next page, and you also had some positive things occur during this past year. We remember now that the health insurance rates didn't grow as much as we had anticipated, and so from a conservative budgeting standpoint, Connecticut, as other districts, put a number into their budget that was their best estimation as to what it was going to cost. The other thing that was a positive was the teachers' retirement system rate dropped by about 24%. And the employees' retirement system rate dropped a little bit less than 10%. What does that do for you? That generates $3 million of fund balance just from that piece. So not to say that you can expect that prospectively, because when you get the chance to look at the financial statement, you'll see that the employees' retirement system is still underfunded. And so at some point the contributions are going to be elevated, probably even higher than they are. And the teacher's retirement system rate, although it dropped significantly between the 2 years, the board has not yet set the rate for the subsequent year, and anything can happen depending upon the economy and that 5-year rolling average that they deal with. Okay? So the good thing is that you were able to generate fund balance, and we know that there was a capital reserve that was approved by the community. And so this gave you the ability to jumpstart the funding for that capital reserve, which is a really good thing, okay? So that's in place, and now you go forward with authority to spend that, okay? You've also been very diligent with using bond anticipation notes, and so because the interest rates have been favorable, you've been able to borrow and get a significant premium because you do have good financial condition. You haven't permanently borrowed. You borrow, you repay it, a portion of what you can repay, out of cash flow. And then when you size your fund balance again at some later date, if there is more that's available, then you make the decision based upon the change in the interest rate whether or not you want to pay additional. And I think the plan is to look at paying some additional bond anticipation notes down as you go forward. And so you do need the fund balance to be able to do that. And that's not taken out of the fund balance numbers that we're looking at right now because it has not occurred as of June 30th. So like I say to the Board of Education all the time, this is a snapshot financial June 30th. We look at July 1st, you've already appropriated reserves, a good level of reserves, and you need to do that to support your budget. You have retirement system costs. You're self-insured for workers' comp. You have people that separate from the district or are entitled to get paid out for termination pay. That all comes from your reserves. That can't come from your unassigned fund balance, okay? You're not appropriating for that. So to the extent that you have reserves that are meaningful, and you have unassigned fund balance to do these things prospectively, you'll be able to maintain good financial condition, and I think really that's very important going forward. The other documents that you have, as you might remember, even though the extra classroom activities are not part of what the business office has jurisdiction over, the State Education Department wants us to audit them. There's an extra classroom. There are extra classroom treasurers. There are faculty advisors. So in your packet of reports, on the cover it says Extra Classroom Activity Funds Financial Statement. It's a cash basis report. It's based on our interview process with the central treasurers. It's based upon testing transactions, payment orders, cash receipts to make sure that there's appropriate documentation. And there's an accounting system in place which then gives us by club and activity the receipts that have been collected and the disbursements. And as I mentioned, this is on the cash basis, so this is where it gets a little bit confusing because clubs and activities might have fundraised and they might have generated some good balances in their particular account, but the activity that's going to spend down that money may not take place until the next school year, okay? And we'll look at that again during the subsequent year. Across the board, there's about, when you look at page 4 of the document, there's about $750,000 of funds that the students are involved in from a business purpose standpoint. Remember, there's charters, there's faculty advisors, and this is a learning experience for the children. So these look like they are administered well as far as the funds are concerned. The other document that you have in your packet is the document that starts in planning and performing. And so this is what's known as the management letter. And as I said before, the audit starts with a risk assessment. Are there good controls, checks and balances in place? To the extent that there are restricted reserves, is there cash to cover those reserves? Is there support for expenditures? Are monies going into the district accounts on a timely basis? So there are good controls in place. But nevertheless, as the auditor, we evaluate the different financial cycles and we will recommend, as you're aware in the past, procedures to even shore up those controls even more. There are no significant deficiencies or material weaknesses, and just as a reminder, those are the ones that need immediate attention. It means you have a control that's not in place, or you don't have a procedure what's known as a mitigating control to evaluate something for which you don't have segregation up front. There's nothing like that. These are procedural. We start the document with those items that we noted in the previous year. A number of them are in process. You look at the information technology. This is a large item. So this involves a disaster recovery plan getting finalized. The summer handicap program and the preschool program, this is being evaluated by the business office on an ongoing basis. We might remember that those rates as far as reimbursement is set by the State Education Department, rate setting unit. And so to the extent that you offer these services, they may not be fully covered within the rate structure that you have, and you may need to anticipate an additional transfer through the budget to the special aid fund to cover what that shortfall might be, because it's very difficult to contain those costs. Still probably cheaper than sending children outside to other locations, but nevertheless, it's not meant to be a self-sustaining program because the state is looking for you to really support something that you're offering along these lines. We had a couple of new comments this year and nothing high level as far as controls, but I did want to talk about the food service program because, and it's the last comment here, because this is a difficult one. The program is supposed to be self-sustaining, And the Board of Education has built into the budget a $20,000 transfer. And it's interesting because we audited a number of school districts, and this has become problematic for districts to be self-sustaining, especially within the last 3 years. And it seems that the larger the district, the more difficult it is, okay? And it has to do with the level of federal and state reimbursement that you get and the participation. And it's all things that I'm sure the Board of Education is aware of. So on page 5 of this document, I gave you a schedule for the last 3 years of what the operations look like financially, and you can see what the shortfall has been for the last 2 years, even after that $20,000 transfer. So at some point, and I know the business office looks at this, you have controls over the collection of the money, the spending of the money. At some point, the Board of Education should be looking at whether or not you need to support the program with a larger transfer, or do you want to look at administering the program in a different fashion? That's really the two choices. But as you know, as I said before, it's not unusual. Most school districts are experiencing this. The last document in this packet is a communication to the board, and it's fairly lengthy as far as the standards that we follow. So just to go through that. Generally accepted auditing standards, generally accepted government auditing standards, all the financial statement figures in accordance with generally accepted accounting principles. And that's all in order. If we had any difficulties when we perform the audit, any information that we requested that had not been submitted that would be cited in this letter, nothing along those lines is included. So we do appreciate the cooperation of the school district. They're very timely and they're very responsive with whatever information we ask for. Part of what we do is we interview staff to understand the control cycle. Those interviews are in private, and then based upon those interviews we can determine whether or not there's a possibility of fraud. We don't see that in the process that took place, so that's very important. We've attached some journal entries to this document. And it may look like a lot of entries, but a number of them have to do with, you might remember, there's 2 sets of financial statements, the modified accrual basis financial statements, which is the way the district keeps their books and records. It doesn't include capital assets and long-term debt, because that's charged to the budget as you're going along. And then the accrual basis financial statements under GASB 34 that we're required to present. It's just for information. So most of those entries that you see there are to convert from the modified accrual basis to the accrual basis. The rest of the entries are really not material based upon the tolerable statement level that we've assessed. I don't know if there were any questions.
My only question is, in terms of the bonds, is the 1999 bond paid off yet?
Let's see.
I don't know who will answer that.
I can look right now. We can look at the financial statement. Let's go back to page, just bear with me for one moment. On page 40. So you might remember the district refunded bonds to take advantage of savings and to take advantage of the lower interest rates. So the bonds outstanding at this point are at the top of the page. So the one that has not been refunded at this point is 2008. And I don't know whether or not that can be refunded. I don't recall offhand. But everything else has been refunded to take advantage of the lower interest rates.
I thought that was, but I didn't know if it was paid off yet.
Not yet. There's still maturity. But you have level, as you can see, you have level debt service. It's a little bit shy of $8 million, so that's a good place to be. At least you can plan for that fairly consistently within your budget. So that was a good thing that the board decided to do.
You mentioned about the lunch program. You mentioned earlier about the lunch program. What are the districts what are the districts doing? Because I know we do fund it. You mentioned about $20,000. Do they increase the funding every year to cover?
They look back historically at the last couple of years, and if you had a shortfall of $100,000, that's what they would be looking to incorporate in their budget for the next year.
So are they moving over to new food services, or they're just,
Supplementing it, and actually some districts are deciding they don't want to offer the program in every building. They're looking at participation in building. Some districts that aren't offering them in high school, some that are offering them in a couple of elementary schools, not all of the elementary schools, some that are looking at different choices, a number of different things. I don't know that there's one size fits all. It really, I think it starts with participation at each building. The numbers are available based upon the food claims that are submitted, and then you can get a better sense as to whether or not the participation is the issue. Is it the cost to actually deliver what someone wants to actually eat? And then the reimbursement rates have been fairly, there's a little bit of a bump from the federal reimbursement rate this past year, but even so, it's really not enough to take care of the food costs, because as you remember, on the paid meals, we get, what, 65 cents, Sharon, from the federal government? It's very, very small. So unless you have a big population of free meals, and then the next biggest bucket would be reduced meals, it's going to be very difficult for you to break even going forward.
So what's contributing to our deficit? Is it kids are not paying their bills, or?
No.
No, it's not that.
Correct.
No, I think basically it's because we have our own food workers and we pay.
That's correct. You have your own staff, so there are some districts that outsource the whole program to a food service management company, and they're able to typically contain the costs a little bit better. Okay, but the districts, and there are many districts that have their own employees, those are the ones that actually are looking at larger losses because of the salaries and the fringe benefits that are involved.
Jill, in comparison with other large districts, where are we? Are we low in comparison to them, or high? Where do we sit with this loss?
So you have your own workers, and I'm just thinking about another district that's a comparable size. They're in the same situation. They have about a $250,000 operating loss. Yes. So yours is that's what I'm saying. Yours is relatively small for your size program, but it's still a number that needs to be reckoned with at some point. And I know that's what you're going to do.
Yes.
Mm-hmm.
Thank you.
Any other questions? All right. Thank you, Jim.
Thank you for your time. I appreciate it.
Thank you very much.
Thank you, Joe.
Can I have a motion to adjourn the audit committee meeting?
have to accept the external audit report first.
We have to accept. I need a motion to accept the external audit report.
Motion.
Second?
Second.
All in favor? Aye. Now I need a motion to adjourn the audit committee meeting. Motion?
Motion.
Second?
Second.
All in favor? Aye.